everybody. Good turnaround Tuesday, although turnaround Tuesday happened in Europe last night. Didier, how are you? Alexandra? Hi, Kevin. Marco? Hugo, how are you? Rena? Lil Sinatra? Paul Smith? How are you? So turnaround Tuesday happened while I was getting REMs, rapid eye movement, sleeping with the dollar, possibly a short-term top in yen happening, and the gold really exploded along with silver. So, you know, uh, the fade was either yesterday at the U.S. close or last night. S&Ps have tried resistance a couple times. This was Sunday night. This was during our session here. Is it going to try it again? I don't know if it is or not, but this resistance definitely is holding. If we have one more pop, maybe it's going to try this. Oh, gosh. There we go. That would take it up towards the 78.6 level up here. So we'll see. That would be a little bit too much. I think that we have to stay under this resistance, maybe one poke, but I'm still looking for some acceleration to the downside. So we held 38, we held 38.20. I'd say next time under 38.20, there's problems here. Getting a little bounce back in crude, but that was a pretty good call on the divergence that we had up here. It's really the only TF. This is confirmed on the 4 and the 2, and looks like we could have a little bit more push, but I wouldn't be long crude anymore. I'd be looking for some type of hard break. And I was looking at this in the yen, and this is a turnaround Tuesday play in my mind. It hasn't really broken that much, about 30 pips off last night's highs. But I noticed this, so I'd show it to you guys here. See, that's a weekly, and we went to the 200. Weekly average is at about 109. All right, so I'm not looking for a collapse here. Maybe 107 and a half. The 2-week off number is 106 and a half. But I think that we're going to get a little bit of a pullback. Yields are coming in a little bit too. See this? That's a weekly. But it looks like we're rolling over. I guess the question is, do we get a 3? Here's 1, here's 2, and do we have one more push up to the upside? One more push. So we'll see, but dollar under pressure includes Canada. I still think this is consolidation, all of this in here. And I don't know how much I'd be looking for in the dollar, maybe back to 91.60 or so. I don't think we should close under 91.43. That was a kind of a breakout there. So maybe we get a couple of days of dollar weakness, and it was due, right? We were due to have something like that. Similarly in US dollar yen. So, we're getting this type of action. This is pretty impressive though. Yesterday in silver, it really didn't make a new low while gold did. So we'll see what kind of legs we have here. Are we going to revisit the breakdown at 1760? It's possible. I have an off number up here around 1739, 1740. And with that being said, keep an eye on the yen and on yields coming off. And I guess if there was ever a time for the S&Ps to really put on a charge, I think it would be now with what's going on here. I don't know what happened to the S&Ps, but you look at NASDAQ and certainly doesn't look great, and this is what's been leading the way down. So I'm still bearish. How about you, Blake? Bullish, bearish, neutral, strongly neutral.
Bearish, bullish, what? I'm sorry.
Oh,
What were
that's
you?
okay. Stock indices.
You know, it was interesting. There's a here. I'll show you something real quick. Well, there was a note from Bloomberg yesterday, and they're just saying that the divergence that we've seen between the Nasdaq and the Dow is the biggest divergence that we've seen since sliced bread. I hear. No,
Yeah.
since like the beginning of time. No, since 1993.
That's the
1993.
beginning of time.
Yeah, it says Nasdaq 100 has not diverged this much from the Dow since 1993, right? So I was just telling the guys and gals in the chat room, I'm like, this is the day you probably want to be on the sell side of the Dow, probably, because everybody's been noticing that, but now that that it's actually, I don't want to say being noticed. I think it's being now it's people are talking about it. This is probably where the Nasdaq actually bounces a little bit and the Dow comes off, and the S&Ps might come off as a result too. But you asked if I'm bearish. I think we're in a triangle or a consolidation phase right now in equities.
Okay.
Here's the S&P, and if we can break like the highs from yesterday, because you're talking about it is Tuesday, maybe we get a turnaround Tuesday, maybe we get back to 3,900. I think 3,900 is where the S&P is probably going to find more resistance, and I think the support is down here around 3,700. So am I bearish right now? Well, I mean, maybe a little bit later today. I just think we're going to consolidate. What saved the markets last night? And I was out with my I was out with my son last night. China's state fund started buying stocks after the Shanghai has just taken an absolute wallop. And I mean, we sold off and we went down to the 200-day moving average nearly in the Shanghai composite. You see that, Dale?
No.
Yeah,
I don't even chart it. Do you have a chart?
Yeah. Are you seeing it right now?
Oh yeah, there. Okay, yeah.
Yeah.
There it is. Okay.
Yeah. So, and what's interesting is the state, their state fund had announced that they are buying shares now that stocks have come down. And what's happened is you saw this bounce, but actually
weak.
The futures are coming back under pressure. So you got to think about that, because this Chinese state fund is actually buying stocks and the stock market's kind of coming down. So what does that tell you a little, about what's going to happen or what's happening maybe with the S&P currently? Here's the S&P. That was the S&P yesterday, the index. This is the kind of futures. Maybe they will come down a little bit. Nasdaq's, trying to hold up. The Dow, has come off the highs. We might see some selling here. I do think we're going to consolidate more, but anyway, that's what I'm seeing. But the Aussie, as a result, the Aussie rallied back pretty sharply overnight, and we're back at the 38% retracement, or 24% retracement. I'm sorry, in the breakdown point. So, I'm not really too sure what to do. I think what was pretty important yesterday, though, is gold seems to have found some footing here, Dale.
Yeah. Someone showed it was right on a trend line yesterday, an uptrend line going all the way back. So,
it's here. Let's go over to the. This is a completion of the flag pattern. This was if you guys missed this from the other day, this is the chart of the day on the 4th. And, it was just, prior to completion. And we have been targeting at ForexAnalytix the 1670 level to complete the AB equals CD or bear flag pattern. So yesterday we completed it, 1670. And now we're bouncing. So I think that will help the dollar pull back a little bit, as you pointed out, Dale. The dollar might spend a couple of days pulling back. We might get the euro bouncing back towards 119, 119.50, somewhere up there. And when we, that kind of consolidation, or maybe a pullback in the dollar, might give us a little bit of a bounce in
Risk.
risk.
Yeah.
And you also talked about the yen. This was
Yeah.
my chart of the day yesterday, Dale. And look at the weekly trend line that came into view.
Wow.
Yeah, this is 10 years, or I'm sorry, 6 years of a chart. I actually sold the dollar yen overnight at 109.15. So
We both did the same thing. Hey,
oh,
it's kindred spirits, Blake. And see that moving average? That's a 200-week. So you have confluence
yes.
with your trend line and a 200-week moving average. You got through a little bit.
Yeah, in the chat room yesterday, we were talking about the 200 period moving average on the weekly chart too. And you're right. I mean, there's a lot of resistance up here. It's a little overbought, as we pointed out in the chart of the day yesterday, last night. You wanted to see how it acts above 109, and so what I took is just a little small position, because I really would like to see how it does act up here. The pullbacks have been very minor, and I'm not 100% convinced yet, Dale,
Yeah.
that yields are going to come down.
Okay.
I mean, I don't know how you feel about yields, but
I'm never 100% convinced of anything. Yeah, and the rubber bands always stretch further than most of us can imagine.
okay, so
it's
let me
possible.
put it to you a different way. In this business, in your career, have you ever seen the bond market go down for any period of time?
No, we've been in like a 30-year bull market.
Yeah, actually, I just heard
40.
a 40-year bull market in bonds.
Okay.
I remember one of my well, he used to be a really good friend of mine.
Oh yeah, 1982. That's after Volcker was done with tightening.
Okay,
That
and
was it.
yeah, exactly. One of my
Boy, am I
used to be
old.
really close friends. He made his whole living at well, it used to
Kevin
be
Ferry.
no. Used to be at Smith Barney. This one, he actually he was in the Dr. Dre was his one of his clients, and in San Diego. Well, he was in LA, but he's in San Diego, and he was one of the initial guys that helped Dr. Dre get Beats off the ground. And after they sold Beats to Apple, and my buddy made a ton of money, he started hanging out with all the celebrities, and I kind of lost track of them over the years, other than Facebook.
He went Hollywood
once in a while. But anyway, he made his whole career before that in the bond market, and just being long bonds for the last 30 years, and him and his clients. And it's just been, I mean, we've been in a 30-40 year bull market in the bond market. And, rates are at basically, I want to say zero, but they're really, I mean, these are the lowest levels that we've ever seen, and historically might ever see. I'm not convinced that yields are going back down. I kind of think that yields are going to consolidate, and then they're going to start going up again. And if they do, how does the dollar respond to that? That's why when I shorted a little bit of dollar yen overnight, I'm not married to that position, and hopefully today I can get my stops to break even. I mean, it's already just kind of drifting higher. As soon as I got up this morning, I'm like, oh man, this thing's not even,
Yeah, compared to the dollar was the better short, and the gold and the metals were the better buy.
Yeah.
Yeah.
So anyway, well, I'd love to hear my colleagues Steve and Stelios on on their thoughts on the bond market too. But before I do that, let me mention a couple of things.
How about
First of all,
mentioning Morning Edge?
oh yeah, well yeah. If you guys want to listen to the Morning Edge, just remember you have to be a ForexAnalytix subscriber. You don't have to be a premium subscriber. You could be a light subscriber to get the analysis of all of the currency pairs from myself. I go through all these instruments, and it's something that we've been doing together for almost 20 years. For a lot of our traders, and then Steve and Stelios will give their views afterwards. But also, I wanted to mention that that if you want to be part of the ForexAnalytix family and you want to try to get it for free, visit our webinar sponsor, which is Pepperstone Securities. And if you're outside of the US or Canada, you can open an account right from this link. You have to do it from this link because that's how it connects ForexAnalytix to Pepperstone. And they're one of the largest FX brokers around globally, and they're here to assist you. One of the things I like about Pepperstone so much is that they are all about customer service. I know all of our customers appreciate the fact that we're around and people can talk to us, but if you're a trader, like a fairly active trader like all of us are here, then they'll assign you an account manager, a premium account manager, which is nice. So if you ever need to be handled personally, they have people to do that. So anyway, we appreciate what they do as a company, and that's why we partnered with them. So make sure you visit them, and also make sure you, if you can, open an account with Pepperstone, or you already have you already have an account already. Get the light version so you can hang out with us in the webinars when we go through the analysis of all the major currencies. So with that being said, Steve, Stelios, how are you guys doing today?
Hey, Blake.
Good morning. Hello.
Good morning.
Guys. I'm going to pass it over to you, but I just wanted to. I think that we started on a good conversation about yields and talked about this 30, 40-year bull market in the bond market. What do you guys think here? Do you guys think that yields are going to continue higher, or do you think that we're going to go back to zero and possibly negative rates again? What do you guys think?
Well, I want to say this. I think in the big picture is that central banks do not want yields to go higher because of the huge expansion of balance sheet and of bonds out there. So that's what they don't want. Question is, will they get it? I had said for a while now that if we see 10-year US convincingly above 150, then that's going to ring some bells. And what we're seeing now is, we've broken above 150, but we're kind of trying to get to grind higher. I think if we continue grinding higher, then equities and risk assets in general might not panic. But obviously, if we get a spike, then that's where the trouble starts. But we have to also remember that we have some pretty big auctions this week. So is it today? Today we have over 50 billion 3 years. Tomorrow nearly 40 billion 10 years. And Thursday we have I think 24 billion of 30 years. So we have a lot of issuance coming up, and that's going to put downward pressure to bonds and upward pressure to yields. But overall, I don't think the major change is here yet in terms of the general state of the markets. But as I said before, if we do see yields spiking higher, not this slow grind higher, if they do spike, then equity is definitely going to follow lower, I think.
Well, Dave Tepper's bullish against stocks, and that's probably one of the reasons why the stock market did bounce yesterday. So maybe he thinks that yields are heading lower as well. So I want to hear Steve's comments, but what I'm going to do is I'm going to stop sharing so Steve can grab the charts.
Grab them, Steve. Grab them by the charts.
But yeah. Listen, I haven't had such a long career as you've had, Blake, since we almost have a 10-year difference. But in the 15 years I've been in the industry, I remember many, many occasions in which people were more or less convinced that it's the end of the bull market. And when I say people, I mean even like big time established investors. The reason why it's not easy to make predictions about that is because the bond market is not an actual market anymore. It's not a market that people go in, there is some bond issuance, and people go in and they decide based on the prices how much they want to buy, if the price is right, and they in essence set the price. Why? Because the main buyer remains and expandingly so central banks.
Yeah.
So am I convinced we've seen the low? Not at all. Do I believe that in the long term, inevitably, yields will have to rise substantially? Yes. This is an inescapable truth. It's an inescapable truth. The question is the timing. Also, just a reminder, what nominal yields do are not that important to the stock market and to precious metals and to other commodities as much as what real yields do. So the combination of nominal yields and inflation is what's going to show us what's happening. One thing is for sure, in the small extent that the bond market is still somewhat of a market, I think it's trying to price in that inflation is going to pick up. And I think the market is right about that. Now, I want to see what's going to happen when central banks, let's say the Federal Reserve in this case, goes out and mops up all the issuance that is coming to fund all the stimulus that is coming. I remind you that the actual deficit that the US government has been running during the past year is near $5 trillion.
That's nothing, man.
Yeah, let's not fool ourselves. There are no buyers out there that want to buy $5 trillion of US debt, even at current yields, even at the yield we currently have. So, the Fed is going to be doing, if not all, the vast majority of the buying. So let's see. One thing is for sure, in my opinion, even if yields keep drifting lower, higher, for a longer period of time, at some point, stocks will have to budge. I mean, they will have to care once again. You've already mentioned the divergence between the Dow and the Nasdaq. In my opinion, that also shows some type of rotation. So, in essence, a first glimpse of a little bit of fear in the market, because some investors are rather, instead of going out of the market because they know that this is like a big bull market, they are rotationing, at least in, let's say, less high beta stocks. So I think this is part of what we're seeing with yields. It's an initial move to a little bit of a safer, let's say, bet. But in my opinion, the next step from this rotation is going to be just selling everything. Now, as I've said before, I don't think that we can see a prolonged bear market, because I'm pretty sure that the Fed is going to do whatever is needed to even start buying stocks if required.
Yeah, it's not a good sign, buddy, when the troops are retreating and the generals are leading.
Yes.
Right?
Yes.
Thou
Yes.
being the general.
Yes, we haven't seen that happening in a very, very, very long time. So it is kind of peculiar. Having said that, admittedly, even if you look at the S&P, right, and we mentioned that yesterday as well, Dale, it looks a little bit like it's lagging the DAX, right? We had said about the DAX that looked like a bull flag, and the next upside target would have been the 161.8 at 14,788. And as it seems, it's making the move. And to be honest, the S&P doesn't look really dissimilar. The only difference being here is it seems to be lagging a few days, but the move lower so far has clearly corrective characteristics. Now, admittedly, the move lower in the Nasdaq has been, stronger. But I mean, like, looking at the big picture, right? Let's not forget that. I mean, right?
Yeah.
Yeah, it's. I mean, I have no words for this.
Buy a telescope.
Yeah, exactly. So yeah, I think that yields will keep being in the focus. Of course, all the media are now trying to convince that the move higher in yields is a bullish sign for the market. My personal opinion is that this is BS, as the vast majority of the things they report are BS. I think we have absolutely no sign whatsoever that we have positive signals from the real economy. Quite the contrary. I mean, we still keep getting, for example, NFP prints that are north of the worst prints we had during the Great Recession in 2008. And people are acting like everything is perfect, everything is okay. I mean, we had COVID. It's everybody's pretending like everybody's vaccinated, the problem has gone away, and everything is back to normal. We're so far away from that. Plus, even when it gets to that, the accumulated cost from this is going to be an amazing burden to the already weak economies, right? But you know, everybody's pretending like none of that matters. Of course, you can keep pretending that it doesn't matter, but one day it starts mattering.
True.
Anyhow, we don't have any.
Yeah.
Yes,
I
go
just
ahead.
wanted to say, Sansi very correctly says banks may disagree with perpetually low rates. I said that central banks want low rates, but obviously banks make money when the curve is steep. So
Yeah.
they don't care if Fed funds is at zero. They just want 10-year and 30-year to be at,
To be different.
exactly.
That's the first thing that matters. You're absolutely right, Stelio. But adding to what you said, I want to reiterate what I've said definitely more than a year ago. Probably it's a couple of years ago. The banks have reached the point of no return because of the state of the economy, meaning banks cannot make money with very low yields if they're across the spectrum, as Stelio said. But banks will also go bankrupt if yields go much higher because their balance sheets are full of assets that are going to go to zero if debt repayments become much more expensive. So, what's the English expression? Damned if you do, damned if you don't.
Yeah, exactly.
Yeah. So between a rock and a hard place. I mean, the traditional banking model is dead. Dead. I don't remember from which movie that joke was. Dead. D-E-D, which is actually, which is actually isn't spelled like that, but that was the fun part of it. So they're dead, right? So banks are being in life support, acting as an extension of governments and tax authorities. That's what they do. And they make money on the side by trading this charade that's called markets, of course, by having the best kind of inside information, right? Because when the markets are being almost exclusively moved by government and monetary authority decisions, banks are at the forefront of knowing what these decisions are going to be. So the traditional banking model is dead, and banks are on life support, and they can only make money by investing in what they know governments and monetary authorities are going to be doing. That's it. End of story.
Yeah. So like our friends here is saying, so what's the bad news, Steve? You told us all the good news.
Now, having to do with GDX, somebody's asking about the GDX. I'm going to give you a freebie. We talked about this yesterday on the second part of phase, what we're going to be calling the morning edge. I'm waiting for the banners today. I'm actually starting to buy GDX this week. I've already made arrangements. And I'm going to decide which day of the week I want to buy some GDX, and I'm going to keep my some dry powder to buy even lower if we go towards the 61.8 at 27.50. Or if we never do that, if we never actually make it there, I'm then going to buy higher if we see that we break out. But I want to get my hands on some of it. I don't want to be out of position. I really believe that the GDX and the GDXJ, which if you look, they look obviously very, very similar, right? I think they're much closer to finding a low than to the high, right? I think that these corrective moves have already run a big part of their course. Now it's extremely hard to, perfectly time the bottom. That's why I want to, gain some initial exposure, even if that proves to be not the ideal first entry point. I don't mind, because I'm not buying, to hold it a couple of days. Actually, if you want to know what my target is in the GDX, my target in the GDX is 50. I was discussing this yesterday with my friend Dimitris, because we're going to go in this trade together. Actually, I'm going to bring my friend Dimitris for an interview next week, whenever Dale tells me. We're going to be buying this week, as I said, and our initial target is 50, so a higher high. So we're going to be buying, and holding it, and we're very comfortable by doing so. We're actually going to buy a mixture of gold miners, junior gold miners, silver miners, and junior silver miners, with an analogy of 2 to 1. So we're going to be putting like, $2 in the seniors, let's call them, against $1 in the juniors. So we want to have exposure to all of them. So I strongly believe in this trade. I believe that gold and silver are much closer to some kind of a bottom. Speaking of gold, just look at the daily candlestick that we're building and where we're doing this, right? This confluence of supports.
Yeah.
And if you look at the 4-hour chart of gold,
Yeah. Nice.
huh? RSI
Yeah.
divergence,
Broke out.
descending wedge, right?
Yeah. Back to the breakdown it measures.
Yeah. So as I said before, it's not easy to call a bottom, right? But I don't care that much about it, because as I said, I'm going in these trades for the long run. So I really don't mind if they first go lower, but I do see definitely some positive signs from gold, from the GDX as well, silver. Not yet any big type of reversal. But on the other hand, don't forget that silver has been diverging all the way, meaning gold has been posting lower lows while silver is nowhere near that. So that on itself can be considered a bullish divergence between the two metals, right? So that's what I think about it. And, I gave you a few freebies. We don't have an interview today, Dale, right?
Yeah. Scott is not here. I've been looking for him. He didn't respond. So no.
Okay. Unfortunately, my friend Dimitris was out, so it was too late, when we let him know. Okay. Let me see if I can get a couple more questions, and then the rest on the morning edge. While gold has gone lower, GDX has gone sideways. I don't so much agree, Jason, in the sense that I believe they have the exact type of corrective formation, right? Let's see. Look. How could they change that? How do I do it? GDX, and how do we overlap it? New price scale. Yes. GDX new price scale. Wait, that's not right.
That's the wrong GDX, isn't it?
That's the wrong GDX. Yes. Wait, yeah. Let's do it again. That's clearly the. Yeah. It is the wrong GDX. GDX. Let's see.
That's the one. The top one.
That's the one. Yes. New price scale. Look at this. Exactly the same type of formation. You see it?
Yeah.
Very small divergences on the way, but exactly the same type of formation.
Right.
Okay, so
Okay, we'll see everybody in about 40 minutes.
platinum.
No, yeah.
Okay, let's have a look at platinum as well, and then we
Okay.
likely corrective move lower. How are we going to confirm? By breaking through the channel, right? But I'm very bullish platinum in the long term. Look at this long-term move in platinum, right? I think we have a lot more to go, and I think that the move from the lows is clearly impulsive. So I think this was a major bottom at 560. So the medium to long-term outlook is very, very bullish, and the short-term outlook, if we hold this flag, I think is also bullish. So we break above this flag, I think we're headed to a higher high, above 1336. Okay,
So I would say, Steve, is constructive precious metals and the
yeah,
miners.
you can say that.
All right. All right. Well, you don't hold back your opinion. Anyway, and thanks for sharing what you're going to do with your buddy, and giving other people an idea and a little help with the timing of it, Steve.
Yeah, as always,
very,
of course, as always, everybody has to make assessments and take risk according to what they think. The fact that I have extremely high conviction in this trade is a personal thing, right?
Right.
I mean,
We're all captains of our own ship.
Exactly. Do I have a good hit rate when I have a high conviction? Yes. Does this mean that I'm infallible? Absolutely not. Nobody is. You know what I mean?
I sure do.
But
More than most.
Personally, my conviction is this high that I cannot not take this trade. You know what I mean?
I do.
And if it doesn't work, that's part of what we do as a living, right?
Right. Yeah. Thank you, buddy. Everyone, there's our trading warrior brother, Steve Volge. And everyone have a good day. Check the whole team out in the Morning Edge. And remember, most of all, don't just count your pips or your miners or your coins, count your blessings. And we'll see everyone tomorrow. Have a great day trading, everyone. Adios.
Thank you, Coach.
Bye-bye.
All right, see you guys.